What's up, YouTube? This is Q from Stock Street University, and today we're going to be talking about learning to invest. Starters tips. There's a lot of talks and conversations about the stock market. A lot of people are getting a lot more involved, which is a beautiful thing. Now, there's a lot of people that don't really know how to get started. So today we're going to talk about some ways that you can get into the game yourself. So before we get into it, go ahead, like, subscribe, hit the notification bell, and let's go ahead and get to it. All right. So investing, right? A lot of people look at, the money world or the economic world as something you just got to go out and get. A lot of people in recent times have realized that there's ways to actually have the money go out and work for you using the stock market, a method that has been used for generations and generations before, and will be used for generations to come. So today what we're going to talk about is how do you actually get started in investing? So with that being said, first thing you want to go ahead and do is take a look at a brokerage account or a brokerage platform. There are tons of them out on the webs that you can look up online. You have Robinhood, Webull, Fidelity, Interactive Brokers, Charles Schwab, E-Trade, Ameritrade, and the list goes on. Now, you do want to be mindful when you're looking at these platforms. Take into consideration that not all investing options are available on all platforms, as there are several different categories of things that you can invest your money into. Whether you're looking at penny stocks, known as OTCs, actual, stocks on the market within the S&P, NASDAQ, Dow, or just, stocks that are publicly traded in the open market. Bonds, cryptocurrency with Bitcoin, Dogecoin, SafeLight, SafeMoon, and a bunch of others. So you want to know what it is that you're looking for and which platform provides you that access. Also, you do want to be mindful that some platforms do charge you fees. And they do have deposit requirements as well. So you want to be mindful of what that looks like for you. Now, once you have found yourself a brokerage platform, now you go ahead, you sign up, put in some information. Do take into consideration they do ask for personal information, as your brokerage account is taxable, because there will be profits and there is losses, right? The stock market is not a get-rich-quick platform, but however, it has turned the most wealth out of any investment platform year over year. So with that being said, quick numbers for you. A lot of us will raised with the mentality of work hard, save your money, work hard, save your money. Over the past few years, the estimated annual savings account has been known to generate an interest rate of approximately 0.06%. Meanwhile, over the past, let's say 20 years, the estimated rate of inflation has been approximately 3.4%, right? Which means automatically, if your money isn't working, you're losing money. The S&P 500 over the past few years, has generated an estimated rate of return at approximately 12%. Typically, you can look for an 8% return on a year over year, depending on how you invest your money. Either way you put it, you're outperforming inflation, and you're definitely outperforming a savings account. Just think about that. So what you can do, once you have your brokerage platform set up, now you want to understand how much money can you invest regularly without impacting your way of life in a negative manner. And this is where financial management comes into play. There are many different strategies that people use to be able to allow themselves the capital to invest into the markets to be able to generate a return. One method that is used is the 50-30-20 rule. 50% of income is applied to your needs, such as your bills and regular expenses. 30% of your remaining is applied to your wants. So that's things like you want to buy lunch every day, eating out as opposed to making your lunch at home. You want to take a little trip. You want to buy those nice sneakers or shoes or that bag or whatever the case may be. The other 20% is allotted towards savings and or growth, which would be some money for a rainy day and money to get a job, aka money to work for you, investing. Now, when you're looking at the 50-30-20 rule, you have to, or any other rule for that matter, you do have to be extremely disciplined and be willing to leverage your dollar. So you have to learn how to cut back where you don't need to spend money, or find ways that you can consolidate your expenses to a point where it allows you more money on the back end. One way that some people do it, they use credit cards that provide them cash back rewards or travel points, so that way they don't have to save cash for travels. They can use their points that they accumulate from paying off their regular everyday expenses. Just a quick way to do it. Now, it does require discipline, like I said, because you do have to make sure you're able to pay those cards back. Otherwise, you're paying interest, which is unnecessary expenses. Don't spend more than you have. Simple. The other rule that people use is the 10% rule, which you may have learned or heard about if you read like books like The Richest Man in Babylon or heard a few other people speaking. 10% rule is simple. 10% of all income is stashed away towards working for you. And once again, you put a little bit aside for rainy days. You put some into the markets, whether it's investing in the stock market like we're talking about, or if you're looking at going into real estate or whatever the case may be. Another side of the 10% rule is the 12% rule. The 12% rule takes the 10% and gives you the 10% applied toward that investing or that stash to be able to work for you. The other 2% is put away into what's called security emergency liquid capital. So that's that, oh no, I can't get to the bank right now. I need to get going. I need money. In a dire situation, you have some capital on hand. Now, with that being said, taking a look at however your financial structure may be designed based on your income, your expenses, and how your money works, you can figure out what financial management strategy works best for you that will allow you to continuously contribute towards your investment portfolio to continue growing year over year. As Einstein said, compound interest is the 8th wonder of the world. And for those that don't know, compound interest is interest on interest earned. So just consider it your interest growing more interest. Cool. So once again, if you haven't already, the other thing that you want to be very, very, very mindful of, and this is the secret key right here, smash the like button and subscribe. All right, I'm joking. But nonetheless, once you have your full investment brokerage account set up, you do want to make sure you understand exactly how the markets work. You want to know where you're putting your money, how your money's coming back to you. And with that being said, you want to be able to identify things like fundamental analysis, which is going over companies' financial records and their financial status, as well as their plans and goals for the future and how they plan to grow. The other thing that you might want to be mindful of is what's called technical analysis, which is being able to observe the trends and patterns of a company's performance on the markets. So, different companies respond differently to different sets of news. Some companies might have bad news one day and their stock price drops. Some companies have bad news and their stock price still rises. You have to be able to understand what different news, different economic situations, corporate structures, and political structures do to companies that are publicly traded. Aside from companies that are publicly traded, you can also look into the bond market as well, or the crypto market as well. Either or, whichever one suits your needs, you do want to be able to identify those different things. And also make sure that you know what your risk tolerance levels are. So how much money are you willing to invest on a regular monthly basis without impacting your way of living? How soon will you need this money back? Because this is not a get rich quick scheme. So you can't say I'm gonna put $100 into the market today and hopefully tomorrow I'll get 2,000. Highly improbable. All right. And with that being said, I appreciate you guys for joining us. Once again, this is Q from Stock Street University. You can check us out on stockstreetuniversity.com or any of our other social media platforms. If you have any questions or you want to see any different types of videos, or even if you want us to expound on the content provided here today, feel free to go ahead and put your questions or suggestions in the comment section. And we look forward to sharing more information with you guys. Thank you.